Welcome to my quarterly webinar, my deep dive. Today's theme is it's time to pivot to a new way of operating your business. We're going to cover three themes here, three different types of uncertainty that I see happening in the marketplace. Number one is economic uncertainty and disruptions. The second is about technology and AI. And the third is the roll-ups going on in the industry and how you can prepare for that. Normally, the agenda goes as follows. Normally, it's 45 minutes of presentation and then 15 minutes of Q&A, and then we break out for 30 minutes into breakout groups where you can meet a few people. You may know them, you may not, but followers in our community here, and you can process and digest together. Hey, what are you seeing? Here's what I'm seeing. What's your takeaway? Here's mine. And so that's how we normally approach this, but I'm going to approach it slightly differently this time. I'm going to ask for interaction as we go and really sort of crowdsource what everyone is seeing here. And so we'll use the chat for that to crowdsource as we go. And I will monitor the chats when I ask my questions. You should be using the chat right along anyhow, right? Keep using the chat as a way to trade information, etc. And then when I ask you some specific questions, we will use the chat to kind of get your answers. So again, the three topics: economic uncertainty and disruptions, AI and technology, and then roll-ups in our industry. And I am counting on you guys to have your fingers on the chat as we go through this to add your 2 cents, 3 cents, your perspective. And so here's economic uncertainty and disruptions that I am seeing right now. And of course, inflation is number one. And it's been with us, what is it, a year now, maybe more? And it's not going away. It's very pernicious. And so it's going to remain an uncertainty and a disruption. The Fed keeps hoping, praying, we've got this under control, we're going to get on top of this. But really, to stop inflation, you've got to tamp down the economy. And people talk about a soft landing. I'm not as smart as those guys, but I don't know if they can actually do that. I think when you want to land the airplane, you got to hit some, you got to hit the ground, and sometimes you have to hit it hard. So I think inflation is going to continue for a while. I hope I'm wrong. I hope the whole thing reverses, right? But I don't see it as of today. The second economic uncertainty and disruption is China and Russia and the war. I mean, China is going to be full of surprises. Our issue is, number one, our political sides really can't quite get together. I've always said that we actually need China to pull us together, but and we are being pulled together, the different political sides, but we're not as in lockstep as they are. And as you can see, it's hard to be the dominating force in the world because we simply can't cover all aspects of the world. And so it's going to be a bit of whack-a-mole. I think China's going to continue to grow in their influence and be where we're not. I don't really think there's any way around that. But the issue as well with the war in Russia and then what's happening with China and Russia is going to continue to cause disruption. It's not going away anytime soon. We're seeing China leaning in towards supporting Russia. On the one hand, they can't really afford to piss off Europe and all of their other markets by supporting Russia. On the other hand, this whole war is a bit of a proxy. It's not real. It's like the superpowers fighting each other through this proxy third party, and sort of a, wink, wink, here's how we're fighting. And if it keeps heading that way, it will remain to be disruptive. The third uncertainty I'm seeing is whether you believe in global warming or not, the weather is very disrupting. And clearly the science says things are getting out of whack. And that's going to continue to cause disruption. Some of those might be to your benefit with more snow or more weather in certain times of the year. Clearly, we saw a lot of disruption with not enough snow in many parts of the country. And I think it's got to remain in your calculation that it will remain a disruption. H2B, heck, I'm not going to even address that. I don't think that our government is really going to make a long-term solution there. It's kind of like rolling the dice. And if you don't, and if as long as you have a backup plan, you can keep rolling the dice there. Obviously, it works for many people and it causes a lot of frustration for many people. Again, these are all things that I don't see ending anytime soon in terms of being disruptive. We have the tech industry and all the layoffs. It's with the tech bank cratering just last week. While unemployment is still not growing, it still seems to be shrinking or holding steady, except in the tech sector where it's really causing a lot of disruptions. And so I think that's going to continue. I don't see that abating anytime soon. I think it has to work its way through. And so these are the economic uncertainties that I'm seeing. Is anyone seeing any other types of economic uncertainties and disruption besides technology, which we'll get to in a second? Just use your chat. What else are you seeing? Inability of Fed, right? We already covered that, Shane, right before you got on. Any other economic uncertainties? Type them into the chat while I pause for my drink of soda water. Okay. I think we're in agreement here that these are some of the major economic uncertainties. And so I would call these the cons. And so what are some of the pros that go along with these cons? Well, there is the pro that the supply chain is being worked through, especially as the economy tampers. China's economy is sort of up and down, up and down. It hasn't really taken off again. And so that's a flip side. It is a pro. I do think the workforce is going to stabilize and make it a bit easier to hire, although inflation is driven largely through the workforce. So sort of fighting trends there. But I do think it's going to be easier than it was, let's say, a year or two ago, as sort of the pandemic money works out, as the Republicans come back to fight the Democrats a bit on the spending. I do think that's going to shift over into the pro column. Capitalism, that's always a pro. Now, capitalism destroys and rebuilds. I'll have to think of the economist's name from Austria who coined the phrase, what was it? Creative destruction of capitalism. The name will come to me, or one of you can throw it into the chat. But that's what capitalism does. It creates new industries and thereby destroys old ones and consumes them. And we're really right in the middle of seeing that happen with all this technology coming forth. Part of the next revolution, if you will, like the industrial revolution we had, decades ago. And so it's can feel like a con. Oh, new technology coming. Oh my God, what's going to happen? A disruption. But it's actually going to bring a creative force back into the economy that I think is going to be a pro and help us to keep innovating. And lastly, Americans like to spend money. That's always been a plus. Given all things being equal, we're going to want to keep spending money, keep investing. We believe in capitalism. So those are some of the pros I see in the marketplace. Now, let's see. So let me ask you, before we get on to really some of the major disruptions like technology, what actions are you taking to deal with these pros and cons of disruption? And I wrote some notes here. There you go. Joseph Schumpeter. Excellent. That was the Austrian economist who spoke about creative destruction of capitalism. What are you doing to prepare yourself and to handle this disruptive economy we have going on here? And I continue to see it going on. John says he's raised prices to get ahead of things. What else have you done? Matt Bailey's been paying down debt. I'd like to hear one thing from each of you here on this, on my question here. Creating better value for clients and taking time to spell it out to clients, says James. Okay. What else are you doing to address the uncertainty of the economy? Listen, there's at least 20 of you online. Actually, there's 62. So let's get a bit more. Brad, hey, Brad, getting more diversifying the services he's selling. Another, reducing bad debt, cutting waste out of processes, said Tom. I agree with that. Getting paid sooner, so changing terms and contracts, says Nate Moses. I totally agree with that. Creating more salaried positions within our company, says Jeff. That's interesting. That's an interesting sidebar. I'm assuming that's to create stability of your workforce, Jeff, to be able to handle the bit of chaos happening out in the economy. Spending more on marketing, absolutely need to be doing that. Yep. So I made myself a couple notes. Let me pull them up here. I thought I had them up, but give me a second. This is very interactive. So I'm going to pull up my notes. Where are they? Okay. So here's a couple things I think you should be doing. I didn't put them in the PowerPoint, but a couple things I would be thinking about given all this disruption. So first off, increase marketing. And you should not only increase your marketing and marketing spend, but you should increase your marketing savviness. I don't believe it's something you can just outsource and expect your outsourced marketing team to have all the know-how and skills. You got to make sure that you are getting savvier. And one way to do that, by the way, is just to interview different marketing firms. You might be happy with who you're using, but go interview a couple others. My clients know they can always reach out to me, and I'll give you 5 different marketing sources that you could interview. But that interview process will make you smarter. Just like you hold your insurance agents accountable by every few years shopping out insurance, you should be getting smarter in marketing. So number 2, improving your sales process. And I'm going to talk more about that in my 3rd bullet point here, but improving the sales process. You've got to get stronger at marketing and sales when clients are more uncertain. Many of my clients are using sales training. They're reviewing their sales process in our peer groups, comparing, contrasting sales processes. They're tracking their metrics more closely, right? Leads that are coming in from marketing, leads that are creating appointments that are creating proposals or designs, and then designs or proposals that are creating the contract. Got to get savvier in how you manage that. Consistent estimating. And the reason I say that is you can't afford in this more uncertain economy to throw bids out that have a wide variability of accuracy. When you could sort of get away with that and have maybe higher prices than normal when you sort of overbid, but that's, well, you're no longer going to be able to get away with that. And so fine-tuning the estimating process, which means actively using job costing to do that, very important. Focusing on lean management. It's not really a topic that we've heard much about in our industry for years, maybe a decade. And it's a topic you're going to hear more and more about. Getting more efficient in your operations using lean management. Many books out there, there's podcasts out there, et cetera. And also focusing on better SOPs. Ted, who I just saw you on here, brought up the newest book by the whole EOS traction. I don't know what you even want to call that, book club, all the books that come out about EOS, and there's a new one on processes. So getting a handle on your processes and lean management is absolutely going to come back in vogue, and what you need to do so you can get your efficiency tight, you can get your estimating tight. With marketing, you can do a little bit better of shopping and qualifying your leads, and with better salesmanship, you can then close the bids you're getting, and all that without eating your margins totally or giving away those margins in the uncertain economy. So let's see what else we have in chat here. What else is everyone doing? Networking with vendors, diving deeper into budgets, looking at acquisitions. Okay, adding a division. Yep, more diversification. building excellent relationships with clients. Amen. Get closer to your clients. We'll be addressing that quite a bit at the Summer Growth Summit coming up at our pre-event, my client-only pre-event. I have the Summer Growth Summit, and then I do a pre-event where I bring in speakers from the host, et cetera, and we go deep dive into sort of a sub-segment, and we will be talking about getting closer to clients there. I mean, that'll be covered in spades throughout the entire Summer Growth Summit, so you'll definitely learn more about that. Very good. A lot of great answers there for you all in chat. Great discussion topics in your leadership teams. You can just download the chat. You can all do that, by the way, download this chat. So make sure you do before you leave here today. Okay. Let's look at we already did that. Let's look at AI and technology. So I'm covering 3 specific items here today, right? Let me go back to those. Economic uncertainty and disruptions, which we just covered. AI and technology, we're going to talk about a bit, and then roll-ups in our industry, we're going to talk about. So I talk a lot about technology in my different webinars. We talk about it in our peer groups. There's always some new technology coming in, and I would love to hear what technologies you all are using. So I want to talk a little bit about ChatGPT, where that's going, and then at the end, I'm going to ask you about the different technologies you're using. So if I'm assuming anybody who's smart enough to be on this webinar to work on their business knows about ChatGPT and has used it. I used it for a newsletter I wrote a week ago. It wasn't that great, but it did give me some good ideas. I put it in my topic. I put into ChatGPT what its top 10 ideas were on negotiations, which was my newsletter from last week. It gave me a couple ideas, and you know, it wasn't great. I also went into ChatGPT to talk about my webinar topic that right here. It wasn't great. It was just sort of tried and true. So it's interesting. If you want to do something creative, one of my peer group members said, write a poem on the value that we all got from our meeting here in Key West. One of my peer groups went to Key West. The poem was pretty funny and pretty creative. It wouldn't have won any awards, but it was definitely outside the box in that sense. You could teach how to write a poem, I suppose. But this ChatGPT is going to accelerate. When one comes out, it owns the market. You have a monopoly. You don't need to get better. But we do know that Bing and others will be coming out shortly, and then the fight will be on. ChatGPT, I think, gathered information as of 2021, doesn't actually have new information. I typed in the size of the landscape market into ChatGPT. It wasn't even up to date. It said there were 500,000 plus companies, and if you look today in Google, you get a larger, more accurate number. But more are coming, and with that, we're going to see them improve drastically. But there's also many extensions and variations out there. I don't even have a handle on all the different variations, but there's a lot of variations for creating visual design, for different sub-segments of where you might want AI's help. And it's going to get very, very interesting very quickly. And so here's just some of the uses that I see coming that will come out. First off, I think it'll overtake Google. Google should be very, very scared. It became the verb and the search engine, right? You Google something, you don't even search something. It'll overtake Google. It'll become some new search term, and Google, which probably thought they had a monopoly, is gonna. It's, you know, if you own the Google stock, you better hope that they're the one that comes out with the next winning variation. Otherwise, I'm not too sure what's going to happen with that stock. You can use it to create marketing, right? This is sort of a simplistic, but a simplistic example that will make my point. You could have it write all your blog posts, and you might use a marketing firm to write your blog posts. You might get one a week. You could get 2 a day, and that would help you in your SEO. I mean, super, super easy to do that. And so, and I'm sure there's a lot of other ways you could use it for creating your marketing, your websites, your brochures. You can use it to create designs, or you will be able to. I predict within 3 years, it may be hard to charge for design, and design may or will look completely different, where sort of high tech, high touch, where you're using some kind of app to do the concepts, to do the initial design. Who knows, it might integrate with your software. It might actually start doing the estimating for your designs. It's going to move quickly. It's going to be bumpy, but we're going to see some big changes in how anything that we do that we're plugging in manually into a computer changes, or anything we might do with our hands on a software like design is going to change. And so I've been a big proponent of charging for design. God, if I was in an LA only firm, they had a lot of trouble during the last recession, if anybody is as old as me and remembers that. But LA struggled, and I think they're going to struggle again. It might wipe out that whole field or totally drastically change it. And so you have to be on the cutting edge of these apps and softwares to go along with the ride. I think it'll help in recruiting. I mean, why can't, once we get a real-time chat GPT, because right now it's, like I said, the information's a year or 2 years old. But once we get it real time, why couldn't you just go in and say, find all the project managers working in my area and pull them together into a spreadsheet? And then you could sort of systematically go around poaching people. I'm making that up, but something like that's going to be possible. And even vice versa. If someone's wants to find a better job, it'll be a lot easier. And that's just a subset. I just ran a peer group meeting in Charleston last week. Beautiful city, by the way. It's like a clean version of New Orleans. It pains me to say that. And it's probably a safer version, although I've been told outside of Charleston, there's some pretty unsafe areas. But it was nice, very beautiful. So we held a meeting there at Lee Hickman's Charleston Grounds Management, and he was showing us this AI-enabled recruiting platform, Skillate. I looked at it. I don't know how AI it enabled it actually is, but I think it's a great start. And I think when you look through what it promises, again, I just saw it, so I can't tell you how well it fulfills the promise. But when you look through it, everything it promises you on the software, the innovations will be speeding up, and it will be able to help you quite a bit. So, and fulfill that promise as the months and months roll on. And like I said, once we get multiple platforms, Bing, et cetera, then you're going to see the innovations speed up. So I'm going to give you some of my conclusions, and then I just want to hear from you on some of your conclusions and some of your software you're using. Again, I'm trying to get us done here in time with all 3 topics, so you still have time for some networking at the end. So I think it really has a ramification on your staffing, because the technology is going to change. It's going to be out there, and then you've got to pivot your company. You've got to be aware of what's happening and decide what you're going to integrate into your company. And so I think there's 3 ramifications for staffing. Number 1 is versatility. You need leaders in your company that are versatile and able to handle the changes that are going to start happening in our industry. So number 1, you've heard me say this for months and years, really, you need tech savvy leaders. And if not tech savvy, then at least those that have a tech affinity, right? Tech savvy are people that can grab technology, figure out how to integrate it in the company. People with tech affinity can use the technology easy, and they have an affinity and an ease of operation with technology. You need really both of those skills in your company desperately. If you look to the left of you and the right of you in your leadership team and you don't have it, it's a problem. And I said that even before Chat GPT became a thing, but now that you can see it as a thing, and and the faster innovations, now you can really see what I was saying just a few years ago. Number two, you need people that are flexible and curious. Now, if you're rigid and focused and doing things only one way, you're not going to adapt. So you need people that are flexible. Now, flexible on a scale of 0 to 10, by the way, you don't want 10s or 9s. If you're a 10 or a 9, your flexibility will have you whipsawing back and forth, and you won't build consistent processes and a consistency that your company needs. So, you want a flexibility of a 7 or 8 in there, and not to the extreme. But you definitely need people who are curious. Curiosity is not a skill we really talk about much or think about much, but it's curiosity that creates all the innovations in the world. They're all done by curious people. And we need that curiosity to always be out and some free time to always be out there looking for the next technology, the next app. They used to be served up to us. You could go into Facebook and people would say, oh, here's the newest technology, and that might be enough to stay abreast of things. But now, with the changes happening at the speed they are, you need to be proactively curious. And so those are the kind of people you need. Not curious to the extent of you don't do your job because you're just off in internet land, and not flexible to the extent of you're whipsawing back and forth with all the changes, but enough of both of those, tied in with some real intellect to help you drive your company forward. And lastly, the third bullet point is not just operational people, right? Not just a good project manager, not just a good salesperson, not just a great controller. You need all those, but you need people with strategic mindsets that can look at what's going on and kind of get up above the fray and think about where the company's going or where their division's going, or where controlling is going or sales is going or operations is going, and how to take these disparate changes that are happening and decide what's priority and what's not priority, and how to integrate and what do we focus on, so that next year we're strategically in a better place. So again, that's out of the day-to-day and thinking into the future, how to make use of these things. So these are the elements of versatility. And I mean, of course, we could sit here and chat for an hour on all the other skills you need, but with this disruption happening, I think these are some key skills you need in your leadership team in order to take advantage of that. So that's versatility. That's the one staffing change. The next is high tech, high touch, right? We got this high tech coming, but we can't lose high touch. You just can't be that company where you can't call them up on the phone, or when you get them on the phone, you just get dumped somewhere and you can't get a live person if you need it. If you're selling widgets, fine, but anybody selling more than just widgets, you've got to have the high touch with the high tech. So don't automate everything, right? Make sure you have great response times, and people that are trying to build a relationship with your company want that personal relationship. So you've got to figure out how to make more and more use of technology while keeping the high touch there, especially for those of you that are selling anything that's beyond just fertilizer, right? Fertilizer, that's a little bit more like a product. You can automate that a bit more, but people that love their lawns still want to build a relationship with your company to improve the fertilization of the lawn. So don't go extreme to the high tech, but match it with the high touch needed. And so that can be tech enabled high touch, but still needs to happen. And lastly, staffing ramification is level up your leadership. I have really been talking about this with my clients for a few years now, and I'm going to beat this drum some more. It is really absolutely critical. When you're hiring your next high-level person, don't hire it for the position you need today. Hire it for where you want to be in 3 years or 5 years even. I wrote my newsletter this weekend about how Mariani was able to grow so large organically. And you got to question yourself, how did they really outcompete everyone? And one of the things that they did was hired key leaders way, way back in the beginning, way back here, that stayed with them and grew and allowed them to keep growing into the future. So hire for future needs, which means you need a future org chart, a 3 and 5 year org chart. Hire for future needs, not just today's need right in front of you. And that also means you'll be paying more. Absolutely. You're going to have to spend more money. You might be savvy in how you set it up and you're spending a little bit more. You might say, hey, we're just going for it and we're going to hire somebody a couple levels up. So you can balance that out with use of more remote workers, more overseas workers. You can give every high level person their own assistant, if you will, somebody who's overseas. And so there's ways to balance that out. And it may not totally balance out because you still need great foremen and even great laborers, whoever's doing the actual work, but you can balance it out to a certain extent using remote workers, overseas workers. So that's the third staffing ramification. If you're going to take advantage of these disruptions, you got to have smarter people on your team and got to be thinking strategically where you want to be in 3 and 5 years and hire to get there. Unless you get to the point where you're just milking the company. All right, I'm milking the company and we're not going to grow anymore. And I'm going to sell in a year, 2 years, 3 years. Even that backfires. But I'm just contrasting that you should always be thinking about 3, 5 years out. I was just reading a book on selling one's business, and it's a book that we all read in our peer groups a while ago, and I was rereading it. And they talked about when you're setting up your company to sell, which I'm going to talk about in a little bit, you need that game plan where you want the company to be in 3 years, even if you're getting out today. I'm getting out today, but the people buying your business are not. And so they want to see that long-term game plan where the company is going. It's like Shark Tank, right? If you don't, Mark Cuban's going to ask you, all right, what's your plan? Where are you going to be in 2, 3 years? How are you going to scale this up? So even if you are leaving your company, you still need that plan. And so hire with that plan in mind. Okay, what actions are you taking on the AI and technology route? Let me open up the chat again here, put it on my desk. Let me just hear from a few of you. What actions are you taking on this topic? What new technology have you uncovered in the past 2 weeks that you're looking at? Somebody used ChatGPT's help for a price increase. Oh, I have to tell you this great story about ChatGPT. This is from my peer group I just came from. And one of my clients has a young manager, and they really screwed up in irrigation. They made a big boo-boo. And so they asked ChatGPT to write the response and then the response to the client's response, sort of the apology emails. And I got to tell you, they were brilliant. Remember how I said ChatGPT's approach is sort of mundane? Well, it was a well-written, very apologetic, somewhat mundane email that was the perfect response to the client in apologizing for the problem. I thought it was well done. So there's another reason to use ChatGPT. Laura uses Scribe, two-way tech. Let's see here. Implementing better communication apps. Absolutely, you have to do that. 2 people are saying Scribe. They use the app Scribe. Mosier, Hover, right? These are all sort of the newest technologies. What other technologies are you using? Let's just hear from a couple more here before I get to the third topic. Brad's using, I guess he's saying he's using ChatGPT or Scribe for rewriting job descriptions and hiring. So what other apps, tech are you guys using? Everybody gets to donate one thing into chat, one of your newest technologies. This is Chat JMS as opposed to Chat GPT. Those are my initials. Other technology you're using? Anybody else want to share? MailChimp, okay, that's an old one. Someone is developing their own cloud-based database for field technicians with training. ChatInfo, good. Yep. So a lot of companies these days are, I mean, everyone's using some type of operational software. And by everybody, I mean most everybody. But they don't come with all the answers, right? You still have to keep looking out there. 90IO, a lot of interesting things here. Gemba Docs, Grammarly, Monday.com, right? Monday.com is an awesome, or software like that is a great way to automate and keep track of many things. I have a lot of clients using Monday.com and similar. Basecamp, yep. Grammarly. John spent the whole winter looking at new technology. You need somebody on your team always looking at new technology. It can't just be the owner, right? You get to a certain size and you need different people being curious, looking for apps. Okay. Let's look at the third topic here. And so roll-ups. And I want to cover three things about roll-ups in our industry. I want to cover selling your business. Is it good or is it bad? I want to talk about how to always be prepared. And I want to talk about some new questions that you should be asking yourselves in this new age of roll-ups. We all know that roll-ups are happening more and more. I mean, everybody here, every owner here probably gets one email a week from somebody looking to buy your business. And a lot of it's phishing expeditions. Some people are sending multiple emails. And so it's rampant. It's in commercial, it's in residential. The money is just flowing in. The interest is flowing in. We'll see what happens. I mean, in the past, we went through these waves and none of them were really sustainable. We'll see if this is sustainable or if it becomes this wave again where it kind of works its way through and backfires, right? You can't create a colossal brand and expect to give great customer service. I mean, we're kind of watching that right now with the biggest roll-ups. There's new roll-ups happening now where they're allowing companies to keep their brands, and that might be the answer. We'll see. But in any event, should you sell? Is selling good or bad for you? And what should you do? And so here's my thoughts for you as of today. I see a problem with selling your business unless you're ready to retire, which could be at 65. Some people call it 70. Could be at 60, could be at 55, could be at 50. Maybe you're ready to get out of the industry and you really are making a huge pivot. Fine. There is a time to get out of your business, whether you're going to die doing it or do it while you're alive. You are going to get out of your business one way or the other. And so being proactive, 100% good idea. But the issue that I've seen is, and I've had many clients go through this, where they've been approached by some of the big names buying, and what they've learned, well, first off, they're deeply flattered. Oh my God, this company wants to buy me. I'm flattered. I'm excited. I'm getting excited. I'm blushing even. Wow, this is really exciting. It's like somebody wanting to date you, the prettiest girl in the room or the prettiest boy if you're a girl. And it's like, oh my God, this is like amazing and so flattering. But once you kind of get come back down to earth and get your wits about you, for my clients that have investigated this, they've realized, oh, I'm getting a multiple of my salary after I pay taxes, after I pay off my debt. Really what I'm getting is some kind of multiple of salary. And it's not as much as they sort of dreamed about that they would get. Or at their age, it's not really enough to retire, especially with inflation going the way it is. And I think we're going to continue to have healthcare inflation in the future. So it turns out that the number is not this, God, I never thought I'd get that much money. It's not that kind of number. It's more of, oh, it's a multiple of what I've been able to make. And let me jump to the fourth point here. And my clients, the ones obviously working with me, are all on growth trends. In our peer groups, we do that. We're on profit growth trends or revenue growth trends. And at some point, they become the same because your profit and efficiency up. But if you're on a growth trend, I had one client who was offered about 18 months ago, and he was on a growth trend. And God, he was like, his first impression was, this is a dream come true. And then he started thinking about it and realized that it was just multiples of salary. And in those last 18 months to 2 years, his company probably doubled in size. He's grown close to 50%. And he was big, so he got a lot bigger. And the value of it and his profitability has been inching up. And so the value of his business, also because it's bigger, so you get a larger multiple, the value of his business doubled. It's like, oh my God. So for him, it was a near miss. He's making a higher salary, I mean salary plus distribution when I say that. And his company's worth more now than just a couple of years ago. So if you're on a trend, unless you're really ready to make a big change, you don't just get off because someone's throwing money at you. And so that's reason 1 and 3. The second reason is there's a reason you own your own business. You're not a great employee, Mr. or Mrs. Owner, right? You're not exactly employable. And you'd be owning a company, and you'd be trading it for a job. And that doesn't exactly fit. By the way, that's why they say, little sidebar, when you make a deal and you get your upfront money and your earnout, the wisdom is be happy with the upfront and don't expect to get the earnout, because you're not going to like being an employee. Many people quit before they get frustrated, and they just quit before the earnout happens. And the earnout is often based on sort of ideal terms that you may or not get. You may really not hit those earnout criteria. And so better be happy with that lump sum they give you upfront. So these are the top 3 reasons. And then just the myth of diversifying. People say, I'm going to take money off the table. Okay, and do what with it? You're going to put it in the stock market? Not today, you are. You're going to put it into, what was that? SVG Bank? You're going to put it into a stable coin? Maybe 3 years ago, that would have been unhappy, though, if you did that. So where are you going to put this money? You get a very high ROI. The myth behind diversification is that it's good. But diversification, the premise of it is we're going to make your investments more stable by giving you a much lower rate of return. So in other words, you get a much higher rate of return in your existing business. So if you still have risk tolerance, keep riding the risk of your business, take money out as you go, and put that aside, buy real estate with that money, right? Use your business to be the profit generator of your fund strategies and business diversification strategies. That's a plus. But just giving up the golden egg because it's time to take money off the table, well, I mean, I think at a certain age, yes, but not as a matter of course. So those are my thoughts on that. And if you don't earn enough money with your company, then come talk to me. So, but I think everyone here should be prepared to sell the business. You should always be prepared to sell tomorrow, just in case stupid money does come your way, or you get sick, or who knows? I don't even want to go down the negative rabbit hole, but many reasons why you want to be prepared to sell your business. It just means you've got things buttoned up and organized, and that's always a good thing. So that means the owner not being so dependently hooked into admin, operations, or sales. It's number one. Number two, having a leadership team that is sort of running the business and driving the business forward. There's a great example in podcast I did last year. I'm sort of pulling up my podcast here. I have to think, what was the name of the company? It was in DC. It was about a year ago. Maybe somebody can pull it up for me on podcasts. I'll have to pull it up a little bit later. But the whole podcast was about his leadership-driven company. He's not there. There's no GM. He's out of the business. Like I said, he's taking his money, investing in real estate. He doesn't have a GM. He has a team, and they're running the business. And if I'm buying your business, I don't want to just meet one person, your GM. I want to see your leadership team. So have a leadership team in place driving the business. Try to shift from all customizable work to more repeatable work. The value of your business will grow immensely when your work is more repeatable in nature, when it looks more like a product and less like a service, when there's less customization. And even if you're in design build, you can do what I call mass customization. So you make elements of it as repeatable as possible, while to the client, it still looks customizable. The investor sees it as repeatable. The client sees it as customizable. Building out a sales team and a sales process. And I'm picking on that within admin, ops, and sales, because often that's the last thing that the owner pulls themselves out of is sales. And sales and owners don't always make great salespeople. You hear this myth that nobody can sell like the owner. Oh yeah? Ain't true. It's simply not true. I know so many owners that are behind the scenes running the business. Andy, if you're on here, Andy loves to tell the story that as he built out his sales team, he realized how much better they were at negotiating, because Andy was always like, oh, I've got this relationship, that relationship. They'll never take that much. I better sell it for less. And his salespeople their job description and even their incentives are based on closing the sale and making a good margin sale. And they don't have the head trash that an owner has. So just because you're the owner doesn't mean you're the best salesperson. You might be the best rep of your business, the face, okay, and that's still not a given, but it's a maybe, but it doesn't mean you're the best estimator salesperson. And so work on your sales team and your sales process. And I said this was critical anyways to do because of the questionability in the marketplace. So for both reasons. Vision, mission, values. We all talk about it, right? I wrote about it. Here's my book. If you haven't read this, you need to. It talks about how to implement these in your business. But if I'm going to buy your business, I want to know that this is more than just on the wall, but that everybody is operating by this. And if you want to take time off to go on a trip for 3 weeks or a month and get your team running the business, you can't develop every question that might arise and then here's how you answer it. So you've got to give them the vision, mission, values, like Moses and the 10 Commandments. Here's how you make your decisions. So this is not just a good idea that you read in a book, but it really helps the business become more scalable. And lastly, you got to put the S into SOP. Got to get your SOPs figured out, standard operating procedures. You have to keep them simple. When you look at the larger scaled companies, they don't have larger and complex systems. They really have systems that are easy to repeat, get everybody to understand. And so what I've seen is they're a little bit less complex than many SOPs that you might see in a smaller business. So keep your SOPs simple so that you can spread them and scale them and get multiple people using them in a standard way. All right, lastly with the roll-up, some new questions to ask. How do I scale the business? I think an owner-operator thinks about, how do I grow the business? How do I grow the business? What do I need to do? Who do I need to contact? But as an real owner or investor of your business, how do I scale this business? And that's going to have you making different decisions that will pull you, the I, out of the answer. So ask yourself that question. Number two, what risks are low likelihood, but if they happened, they would cause a lot of damage? You might have a key salesperson who's been with you for 10 years. He'll never leave, but if he did, you'd be screwed. That's what you think is a low likelihood, but it'll be a high damage potential. Or a key client that really has, you've partnered with and grown with them the whole time. They would never leave you. Oh yeah? When they do, high damage potential. Maybe you're on a piece of property that you get a sweetheart deal and they're a friend of the family and they'll never kick you off that property. But if they did, it would be a high damage potential. So start asking start asking yourself, what are the risks in your business? Especially the low likelihood of high damage risks that you need to address. And then lastly, am I growing the most valuable part of my business? Often the owner is focused on the sexy, and the sexy isn't always the most valuable. And so for those of you that have that problem, start asking yourself, am I growing the most valuable part of my business? How do I need to shift my efforts as the owner, as the investor, as the key decision maker, to grow the most valuable part of the business? And if you're a leader in the business, an employee, you can help greatly with this by growing the most valuable parts of a division, or helping your owner see that changes you could make could really grow the most valuable divisions in the company. And so these are some new questions to ask yourselves as these roll-ups are going on, because this will make you more valuable tomorrow than you are today. This is one of those things where sometimes you have to jump on a decision, like Shark Tank would say, don't leave the tank without making a move. That's not always true. I Google lots of Shark Tank companies that come in. Plenty of them have done well and exceedingly well by saying no to the offer. So putting off the decision, not a bad thing, but putting off these questions is a bad thing. So you should always be more valuable tomorrow than you are today. And not just because you grew organically, but because you've been making these moves within your company. All right. Let's see, we got a couple minutes here for questions. I'll just jump to that before I put us into breakout rooms. Why don't you think for a second? Well, 1 second. Yeah. So any questions that you want to ask in the next couple minutes before we go into breakouts, raise your hand. I see one person has, they're an iPhone guest. I think they raised their hand. Anybody want to raise your hand and kind of throw out a question here for me to answer on any of these topics? We're waiting. Jeremy, you have a question?
How do you see these bank failures playing out over the past weekend?
Sorry, how do I see what? The bank failures?
Right. How do you see that impacting the economy as a whole? That to be mainly seeing how the media plays it through the next weeks.
Yep. I think for some it was expected. I was talking to a friend of mine who just sold, he's a turnaround artist, a turnaround management specialist in the industrial sector, and he closed on selling his business a couple of weeks ago. And he said, I saw this coming, I knew it was coming. I had money in that bank and I took it out, and I'm really glad I closed my deal. So we've been seeing layoffs happen for what, a couple months now, 3-4 months in the tech sector. So this is the sort of tech related and maybe just sort of all those tech innovations related industry flattening out. It's been happening for a while. So I don't think it's related to the general economy at all. We'll see I may change my mind when I read the news over the next couple of days, but I think it's definitely related to the tech sector. Now, the tech bubble burst, if is anybody as old as me, they remember it in 2000, the year 2000, that's 23 years ago, 2001, when the first tech bubble burst. Was anybody around there? I know John Phillips was. And so could this be another tech bubble bursting? It could be. Will it impact the rest of the market? I don't think it's going to be any kind of like bank scare. I think the Fed was very proactive in 2008. I think they would jump in and stop a scare from spreading, a contagion. But I think it's sort of part of what we have been seeing with the tech sector. And I do think there will be other tech ramifications. Let's just hope that it doesn't create the S&P cratering in the next year. Although Morgan Stanley is my banker, and if you listen to the top strategist from Morgan Stanley, he does think the S&P is going down, but he was saying this, 6 months ago, that earnings are coming down into a trough in general, and that the S&P will kind of come down before it takes back off again. So as long as we can keep it, within the walls of what's happening here, I think we'll be fine. Let's hope it doesn't become that contagion. I don't think it will, but that's what we should be looking for. Did I answer your question? Oh, Jeremy disappeared. Okay.
I think so.
Do you have a take on that? I'm always open to hearing other people's opinions.
No, I appreciate your response. I'm not sure what my opinion is on the whole thing yet.
Yeah.
I'm just kind of curious what your take is on it.
Yeah.
I mean, it's all pretty fresh. They closed it late Friday before it really hit the news cycle. So, markets have not reacted to that yet, in my opinion.
I can tell you the market reacts ahead of time. If you look at the news, before the market opens up, there's already changes because the market's global 24 hours a day. I can tell you what, though, the guys at the Fed are very busy right now in a lot of meetings.
I'm sure. Yeah.
Thanks. Thank you. Any other questions? All right. We're going to put you into breakout groups. And let me just check with Corrine to see if she has done that. And give me 1 second. I'll be right back.